All right, good afternoon, everyone. Futures Barizio here. It's just about 1 p.m. on Friday, June 20th. Hope everybody's having a great day. And just jumping in here again, just to do kind of a wrap up here. We are into the early afternoon on a Friday, so markets will, especially in the summer here, markets will tend to kind of wrap up pretty early here. I mean, we may or may not get some late day continuations here, but more than likely, where things are sitting now is probably pretty much where we'll end up the day. So let's just jump in here, do a quick review. And as always, make sure you smash that like button, subscribe to the channel. Any questions or comments, certainly leave them down below. Okay, so we'll just start here in futures looking. This is NASDAQ. And you can see here, if we go out to a little bit higher time frame, we are putting in some higher highs and higher lows here. I did switch back to regular candlesticks just for this video, just so you can get some comparison. I know the last couple I've been using Heikin-Ashi candles. Like I said, you can use either. The only issue with using regular candlesticks is just make sure you're trading a market that has enough liquidity, and well, not necessarily liquidity, but volume, so that you don't get like big scattered gaps on your chart. And I can probably show you one where that is the case. And maybe you just don't trade those markets anyways, because if the volume's that thin, it could be hard to get in and out and get good fills. Obviously, something like NASDAQ is, these indices are very heavily traded. And so these can definitely qualify for using candlesticks. So you can see, higher highs, higher lows. A couple hours ago, well, a few hours ago now, we go to the 1 hour chart. So if we go, actually, let's go back to the higher time frame first. So we basically had our last swing high right here. And then several hours ago, 1, 2, 3, about 4 or 5 hours ago, we had price come up. That was get basically the market open, come up and poke through this level. This is kind of that sweep level on the higher time frame. Okay, that's basically this area right here. This previous pullback that led to this new low is right in here. You can see price came up, poked through it. We did get a high above there, but we pulled right back into the range and ended up closing lower. And then we quickly reversed with a big bearish engulfing candle down. We had, in this case, the CCI indicator did break below on this time frame. This is the 1 hour chart right here. We did have a break, obviously, with a strong candle like that. We do also have that break showing now on the 2 hour, or excuse me, on the 3 hour. Not quite on the 2 hour. Again, it all just depends how you calculate this. But the video I made yesterday suggested using the 2 or 3 hour. Okay, so I did take a short based on that. You can see right now it is in some drawdown as it pulls back. We'll see what happens with this. I do think that price will break lower just based on the market structure and just kind of the previous action that we see on the CCI. If I get stopped out, I do have a pretty tight stop loss. So, and I'm targeting back at these previous lows, which is about a 2-to-1 risk to reward ratio, just eyeballing it, maybe a little more than that. All right, so that is, I'm going to move myself here, put myself up here so I can see my chart selection. All right, so on to natural gas. So I went short natural gas today. And again, basically, if we zoom out a little bit here, we can see we have been this uptrend really all week. We approached this area. Now, this to me is not a great area to short up, at least not in the long term, but it might turn out to be really good because you can see we have equal highs here. We have this equal high here, basically here. We have several times price came to this region and did reject. However, a lot of times what ends up happening is that eventually this area will break, but you can see what happened, why it's positive for a short position is this candle right here on the 4-hour chart. Well, I mean, you can see it on any lower time frame too, but just looking at this wick right here, you can see price wicked above there, which that would be a candle close on a shorter time frame above that zone. Okay, so here's that wick. This is the 1 hour chart. Here's that wick. which is higher than these zones back here. So that's, for people maybe trading on a really short time frame, that looked like a breakout, right? Breaking out above the zone, this equal high. So this is a great liquidity grab area. And then you can see price pulled away with very strong, aggressive selling. And again, on like the 2 hour, the 1 hour, we had a clear break on the CCI below the zero line, which I talked about in yesterday's video, which we were not doing back here. So again, that along with obviously just a very big bearish engulfing candle led me to take the short here. So whether I hold this through the weekend, I'm not sure. I mean, I do think, again, looking out at the higher time frames, we very well could retarget the bottom of this range again. So, you could look at a TP back here at these lows, or maybe just above there. There is a little small gap here, but I do think price will come down further. So I probably will hold this. Fundamentally, we do have some instability, with what's going on in the Middle East, but I think that's probably more oil driven than natural gas. So whether I keep it or not, we'll see. But I do think, just based on technicals here, that we certainly can have a nice run down here. So we could run into some support maybe at this area right here, which kind of looks like we are right now. You can see price kind of stalling out a little bit at this little flip zone where we had these equal highs before. It turned into support right here. But usually these don't hold out too long. They're kind of like take profit areas, but ultimately the larger pattern, wins out. So we'll see. All right, moving on to corn. And again, overall, in a downtrend, although looks like maybe we're breaking out of this consolidation zone we've been in here since the beginning of June. We had this big pattern right in here, and it looks like today, again, if we look at, somewhere around the 2 hour time frame, we did have a break through the CCI poked up here, and we did break through this level, and we have a strong CCI move to the downside. So I am in a short on this as well, and I probably will hold this one through the weekend. These grain prices are much less subject to, weird stuff on the weekend than, like, say, energy prices would be. Okay, so we'll probably hold that. I'm not in anything in soybeans, and this is one of those charts, even like, well, I'm in this one. This is the micro soybean chart. And again, because it's a micro and it's a little, it's the July contract, you see all these gaps. It's not that you can't trade this, but all these gaps between the candles here is because of the trading volume is so light. And the trading volume is so light on these that if you entered a position, you probably would see the candlestick move. Just for you as a retail trader hopping into like even a couple of micro accounts, contracts, you would probably see the candlestick move in response to your entry. I mean, that's how light the volume is here. So I'm kind of getting away from these micros. I was trading the micros on these mainly because I was, trying to debate whether I wanted to even trade these classes. And certainly I didn't want to risk a lot. The micros on these have very low risk, and it's easy way to experiment with a live account. Obviously, you could do a demo account and do that, but if you want to experience, real money risk, you can trade micros, and one single contract with this is very low risk. But now if we slide over to the mini, which is still not the full size, but you can see the difference here on the mini. You don't see those gaps on the chart. And this is the same contract month as the July contract. And I did enter a short on this. And basically on the 4 hour chart, we came back up here. We've made multiple attempts to break through this previous high. Okay. And then if we go down again, 2 hour time frame, we see CCI break pretty definitively below the zero line, suggesting a lot of weakness. We had one little minor attempt to get through it here. That didn't work. Price just chopped around. The CCI really was not giving any signal. And like I said, this is why I like the CCI. Again, it's not my primary thing. I'm looking at the price action and the market structure first. But this, real definitive break and with this like kind of hockey stick push back through the zero line is, to me, is pretty aggressive. And so I felt, pretty good taking a short. How far it goes, we'll see. We've been, very aggressive here on this giant candlestick, which I'm assuming is probably something news related earlier this week. This was now this actually may have been, I think this was actually last Friday, so it was about a week ago. This candlestick. So those of you that are, smart money ICT traders, you can say, well, this is a giant fair value gap between the low of this candle and the wick on this one. All of this area is fair value gap. So can you make an argument that price, this is a huge gap, that price will come down somewhere into this area, or will it come, all the way back to this origin, back down to here? I don't know what it's going to do. I have no idea. And neither does anybody else. So, but I do think that we will see a push, below these lows before this little consolidation. This wick right here was the last low before prices tried to push higher. So I do think we'll get prices below there. How far it comes and whether we, completely smash through here and start making new lows, or whether we come again somewhere inside the range of this big candlestick to fill in this gap, this fair value gap, or, we come back down here to this, the origin, back down to, this little order block potentially. I don't know. So again, I probably will hold this. Grain markets close in less than an hour, 2 o'clock Eastern time. So that and the corn trade, if I decide to hold them, which I probably will, we'll see what happens early next week with those. All right, we already talked about NASDAQ. So then lastly is 10-year yields. Again, this is a micro contract, again, because I'm not sure whether I'm going to keep this asset on my watch list or not. But I was just trying to get myself some different markets to look at instead of, getting tied into, just energy or just grains. I know people say you should just become an expert at one, but if you're trading, market structure and things like that, simple technicals or whatever, you don't really, I think there's nothing wrong with doing that, to just keep one or two, but you can also diversify once you get used to, looking at the charts and kind of being able to just pick out levels and just understanding picture. So again, on this, if we go out to a 4-hour chart, again, you can clearly see the lower highs, lower lows forming. And then, price came up here earlier today, swept this area. And then we had really bullish momentum to the downside. You can see, again, the CCI slicing back through the zero line. And we can see that on the 1-hour chart. Now, again, this is going to generate false signals sometimes, like right here. So this was, this actually was today too. This was during the overnight session. Now, I wouldn't have been trading in this time anyways. This was 4 o'clock on my broker, which is like probably 10 o'clock last night, 10 p.m. Eastern time. I wouldn't have been trading then anyways. This is a market that's open all the time, basically. So yes, even though there was a sell signal right here at around 10 p.m. Eastern last night, I wouldn't have taken it anyways. So I'm not really too worried about this. And then, we came up and came down and sliced through here, and that was my entry. And I have about a 1-to-1 R to R on this. Again, I'm not really sure if I'll stick with this market. It doesn't seem to really make a lot of big moves. This is a micro, which again is very low risk on this trade. I mean, it's literally like $20 or something like that. But like I said, I'm really kind of undecided. Maybe if I do keep it, I'll go up to like the regular contract, which, so at least if it only makes these small moves, it's actually worth trading it instead of paying a commission that's going to, eat away at half of whatever little profit I make on it, because it just doesn't tend to move a lot during the course of a day. So maybe I keep this, maybe I don't, but I'm in this trade for now. So obviously I'm going to keep this here for now. All right, so that's it for futures. And again, guys, as opposed to my other video the last couple of days, I'm using regular candlesticks just to show you, because I said you can use either. Again, if you're going to use regular candlesticks, just stick to, make sure you're just trading a market. or contract month if in futures or the market, that's going to give you enough candlesticks and not leave a bunch of scattered dots on the screen instead of like consistent flowing candlesticks. Because if you're doing that, it's going to be hard to analyze, and you're also, that's a huge red flag to tell you that you're trading a very thin market, and getting in and out of trades is not going to be great. And you may get really bad slippage. You may get, um, just, not good fills. All right. So that's the only thing I would advise. And if you put Heikin-Ashi candles on, you're going to hide all that because the Heikin-Ashi's take an average. So you're not going to have those type of gaps on a Heikin-Ashi chart. It's going to look fine, but underneath there's a problem. So I would say just, keep an eye on stuff like this, and just make sure you're not, trading something that's too thin, where the volume is too thin. And that's what causes all those big gaps. It's just lack of volume. So there's just nothing being traded. Those spots in between, if you go to like a short time frame and you see a spot between one candlestick and the next and there's nothing there, that means there was no volume trading during that time. I mean, that's crazy, right? But all the people trading futures, no volume traded for a particular time period would be crazy, but it happens. Anyways, and it happens on, especially on these micros on markets that are not traded heavily. You're not going to see that on like a micro NASDAQ or a micro S&P because they're so heavily traded at all levels. But on something like this, or soybeans, or soybean oil or something, you're gonna see that because they're thinly traded. And then if you're trading an out month, like maybe trading the August contract instead of June or July, there's not many people trading that contract month yet because there's other ones that are still available. That can add to it as well. Okay, so just a little tip. Now you don't get that with things like Forex because Forex is just an ever continuing line of price action, and there is no micro, or it's just Forex, right? So you're not going to get it with Forex, but then again, Forex has its own issues that you have to deal with. So, but if you want to just take a quick look at some Forex pairs, again, here's Euro Aussie, and again, I switched over to regular candlesticks just so you can see. This is like 3-hour chart. You can see there was an entry right here. This was yesterday mid-London session, and that entry has never died out. But if you go to the 1-hour chart again with the hindsight of the CCI, here was that entry back here that we had on the 4-hour chart, but there was another entry here today on Euro Aussie today based on the 1-hour CCI pulling back and then poking through. Now I know I talked about yesterday about taking counter trend trades when this breaks through, but today I'm mostly just discussing I'm mostly just discussing having these trades going in the direction of the trend. Okay, and less about counter trend trading. All right, here's euro dollar again, very much the same type of thing here. All right, guys, sorry, I had a little interruption there. I had to stop for a little while. So I'm not sure where I left off, but I was talking about euro dollar, just going through a couple of Forex pairs. And again, we certainly can see this move on the 4-hour chart, CCI breaking above, and nice price action to the upside. You can also see, if you missed that entry back there on the 4-hour, here's another one on the 1-hour. I'm not saying, obviously, again, we're into Friday, but it does look like we're now making higher highs and higher lows. And you can pretty much, do the same thing here. Here's the dollar yen. The Aussie dollar is actually down. Dollar Canadian was going up. It kind of hit this resistance level for the day. But again, it's a lot of the same process, guys. 2 to 4 hour chart to kind of look for entries. And again, I mentioned yesterday about taking counter trend trades. You certainly can do that. Just be cautious, take a bigger perspective of where the market is. look at that 2, 3, 4 hour chart in particular. Say, okay, if I'm taking this counter trend trade on the 1 or 2 hour chart, where is the longer trend? Is it up or is it down? And if you're going to take a counter trend trade based on CCI, that's fine. Just understand that, it's probably going to have a limit to how long you can be in it. Here's a pullback here on the US dollar Canadian. We were, making making a downtrend here. Then we had this big pullback. I'll just mark it off with the tool here. And then if we drop to the 1 hour chart, here's that entry. So again, this is a counter trend trade. We had a CCI entry here, okay, on the 1 hour chart, and we went all the way up here, and you could have held that, until this CCI broke lower. You could have gotten out at this break or this one if you wanted to use the 1 hour chart, or you could go to an even shorter time frame and find an even better exit here, maybe on the 5 or the 15-minute chart. Okay, so again, you can use this for counter trend or trend continuations. Obviously, trend continuations are going to be the safer bet, although obviously trends end eventually. But you can use counter trend as well. Just again, understand where the market is, and if that you're looking at a downtrend and you want to take a counter trend trade up, that's fine. Just have realistic expectations about how far that's going to go. Use market structure on the higher time frame to find like a max location. We go back to the 4 hour on this one, right? Where is our market structure? Well, it's right here. So if you were trading this to the upside, even though we're in a downtrend, this would have been my max target anyways. Now it didn't even get there, which is not surprising because again, the sellers came back in before that, but that would have been my max target anyways. If price had gotten there, I would have gotten out for sure at that spot, but it didn't. So that's where you have to manage it, because you can see when the sellers do come back in, it's going to be very aggressive because again, this is a downtrend. So when the sellers do step back in, you can see you get this very aggressive push down. And if you're not paying attention, you can easily end up having this be a loss or giving back a lot of profits you made, et cetera, et cetera. All right, so just be cautious about that and make sure that you, again, keep the bigger picture in mind, okay? I don't think it's necessarily to be going out to daily and weekly charts, especially for trades you're not planning on holding for a long time. But I would say at least go to the 3 or 4 hour, make sure you understand where the market's at. All right. So anyways, guys, I'm going to leave it there. I hope you have a great weekend. And again, questions or comments, leave them down below. Smash that like button, subscribe to the channel if you can. And again, leave any questions down below. Take care, guys. Have a great weekend. I'll be back next week. I will be traveling again next week. Tuesday, Wednesday, Thursday. So I'll be around on Monday and Friday for sure, but you probably won't hear too much from me midweek or so. I'll be trying to keep an eye on the charts, but in terms of making any content, not likely. Potentially Tuesday night, but definitely not Wednesday. So, all right, guys. So take care, and we will speak to you soon.